Investment 360, and obviously we're downtown here in Sandton and hoping it's not going to rain, but you're obviously the investment manager of the Debswana pension fund, so we wanted to just get insight from an African country and an African investment manager around how you're managing not only the liability for the Debswana pension fund, but also the investment strategy, and that's very much your core. Just tell us, for the benefit of our viewers, in terms of the size of the Debswana pension fund and the type of members that you're catering for within that.
Okay. The Debswana pension fund is a defined contribution pension fund in Botswana. It's the second largest. We have just over 10,000 members, and we cater for the employees of the Debswana Diamond Company, the Diamond Trading Company, Murupule, Anglo Coal, and so forth. So all companies that are related to Debswana, the employees are members of the Debswana pension fund.
Are you the biggest private sector employer in the country?
Well, Debswana Diamond Company is the biggest private sector employer in Botswana.
Okay, so in terms of this fund, you said you've got assets of about 500 million US dollars, which for our South African viewers translates to about just over about 4 billion rand.
That is correct.
Now you've got a specific mandate, and obviously we talked about this a little bit off air around Botswana's equity market being quite small. What's the mandate that you have to invest the funds between keeping the funds in Botswana and being able to invest them outside? What's the split there, and how do you think about how that's going to change in the future?
Okay, currently the regulation in Botswana allows up to 70% of pension funds assets to be invested offshore, with only 30% locally. However, new legislation has come into place, which will see this reduced to 30% offshore and 70% onshore by 2050. It's actually staggered over the next couple of years till 2050. So at various points in time, we'd have to adhere to those global versus local offshore asset allocations. It's obviously driven by, I guess, a need to see some of the pension fund's assets come in and develop the country, but also the fact that a pension fund who's actually based, or rather a pension fund member who's based on Botswana's, his liability is actually in Pula, and having such a large portion of their assets offshore exposes them to risk.
Okay, some of that risk, it obviously is foremost there is the currency risk with the Pula. And in terms of the offshore basket, where's most of the money going? Is it going into developed markets, or do you have the mandate to invest in other emerging markets, South Africa included?
Okay, essentially with our global equities, we've given our managers a full discretionary mandate, so they actually make the decision on which companies they're actually going to buy. But when we analyze the various portfolios, we see a strong bias towards companies that are in developed markets. However, a lot of these companies actually have global exposure, so the likes of Unilever, Coca-Cola, and the like. So although the main counters would be in offshore markets, there's actually a big exposure to the world at large.
Okay, so just in terms of the local market, just to bring it back into Botswana, are there particular, we talk about in South Africa the top 40 index or the all share index being heavily weighted towards resources. What's the sort of sector exposure in Botswana? I'd imagine it's fairly big on resources as well.
Well, and contrary to what you believe, in Botswana it's actually heavily weighted towards the financial services sector, as well as other companies, Letsego, which is a micro-lender. So there's a big bias towards financial services companies in Botswana. A lot of the mining companies are actually listed on the alternative, foreign asset board, which tends to be smaller, as well as the venture capital board. So a lot of the companies that are listed in Botswana would have, they're probably secondary listings and not primary. The primary listings would be in Toronto and in London, and these tend to be junior exploration companies rather than big major resource companies.
Okay, so quite a concentration in the banks. In the fixed income side, I wanted to find out, aside from the Botswana government, is there who else is issuing credit in that market?
We have credit issued by a lot of the banks. A lot of the banks issue credit, but it's mainly dominated by government entities. In terms of the listed space, there is some activity in the unlisted space as well. I do know that there are some of the smaller banks that have come out and have done private placements, as well as some of, we recently had a micro-lending company that was looking to raise some capital privately as well.
Right. So we've got quite a lot of your capital is being invested offshore, and I wanted to just ask you, in terms of using some of the investment managers, how do you go about appraising them and deciding what chunk of the capital they're going to be able to manage for you?
Well, essentially, we look at the caliber of the asset manager. We rate them according to the staff that they employ. We look at their track record. We look at their investment philosophy, try to see if we understand what exactly it is that they're doing and how they've generated the returns that they have. And we also look at their past performance, and we do understand that it's not an indicator of what's going to happen in the future, but it is important for an investment manager to actually have a track record. So there's a process that we employ, obviously, where various things are looked at, including governance, various governance aspects. We use an investment consultant to help us come up with a short list, and then from this short list we may either publicly tender or approach specific asset managers, and once they've gone through the process and they're selected, there's a mandate, an asset management mandate or portfolio management mandate that we enter into with them.
Okay, so I just wanted to, is there any particular bias there? Because once you sort of move outside of Africa, the markets are so large and the strategies are so diverse with some of the investment managers. You get everything from the momentum investors to the deep value investors. Do you sort of embrace all of the different strategies, or do you find that you're very oriented to one particular strategy?
We embrace all strategies. We're open to new investment ideas. However, in the past, we've had a strong value bias. Obviously, the investment climate is changing. And investors continue to come up with new ideas, which we're quite open to. We are currently in the process of reviewing our investment policy statement, as well as looking at our offshore and local managers. And during this process, we'll try to understand better what it is that, or how it is that these managers make their returns. And like I'm saying, we're open to new ideas.
Right. So do you think that the performance, the fact that you're using more value-oriented managers is a function of where the market's been in the last, say, 10 years, that value managers have done better than the other managers?
I think so. A lot of them have actually shown very, very good performance despite the downturn in the market. So that long-term investment strategy focused on fundamentals looks like it has paid off.
And just in terms of, a fairly big bias to value investors, you've also got you've got the ability to invest in alternative asset managers. How do you think about using hedge funds and private equity in the portfolio?
Well, as a Debswana pension fund, we haven't invested in any hedge funds to date. However, we have made some private equity investments. We are quite positive and bullish on private equity. The private equity vehicle that we've invested in is focused on Africa, and it's a mezzanine fund vehicle. Obviously, private equity is a longer term asset, and that goes very well, or that's very suitable for a pension fund which has longer term liabilities. However, because of the generally illiquid nature of the investment, going forward, we probably will not see or will limit our exposure to private equity. Currently, it makes up about 2% of our portfolio. Probably going forward, will increase the exposure to about 5% of the overall fund.
And just I'm interested to know the reason why you haven't chosen to use hedge funds at this point. Is there a particular reason, or is it something that you're probably going to be doing in the future?
It's something that we'll definitely be looking to do in the future. I think as a pension fund, we would like to understand the asset class initially, and as more asset managers come to us and sell their services and their products, I'm sure where we see a case of a specific product meeting our requirements, we'll make an investment.
Right, and one of the last questions I think I've got time for with you is just to ask you, when you see situations developing in Europe, just bearing in mind that I understand you use value investors, or much of the portfolio is using value investors. When you see what's going on in Europe, do you dynamically start to allocate capital there because of opportunities that investment managers are seeing, or have you been keeping your asset allocation fairly rigid in terms of the geographies and the asset spread that you've been using?
Well, we've limited our asset allocation to the asset class and not necessarily geographies. So the asset manager, we leave it up to them to use their skills and knowledge to actually determine the best home for this cash. And I mean, generally, we're fairly happy that they run a very well-diversified portfolio. And despite the challenges that we see in places like Europe and the United States, I think the companies that these fund managers have invested in are quite sound.
Okay. So at this point, valuation, do you think there's going to be a swing back at some stage to growth managers and using the likes of momentum managers in the future, or do you think it's very much going to be the domain of value investors going forward?
Well, I think going forward, there's definitely a case for growth and momentum players. There definitely is a case for them. However, value management, in times of their downturns in the market has